So the correction continues. What's going on, guys? My name is Richard Moglen. Welcome back to a stock market outlook video sponsored by MarketSmith. And today, as always, we'll run through the market indexes, leading stocks. They'll move on to a few different sources of sentiment, the IBD Big Picture article, and finally the Wishing Wealth GMI Signal, and put that all together. And I'll give you my take on the general market health. So first of all, let's take a look at the Nasdaq Composite here in MarketSmith. Overall, we're below a declining 21, 50, and flatlining 200 SMA here. The trend is down on those time frames, and last week we saw it drop about 1.8% overall after a short-term rally into the 21 EMA. The good thing is we are holding above these levels for the time being, but right now it's just very choppy, very volatile, very news-driven as well because of the Fed as well as the situation in Ukraine. So right now, for the majority of position traders, swing traders, the environment just isn't right to be really focusing on maximizing performance here. It's all about risk management, protecting your capital, both financial and mental. So really go ahead and make sure you're following your system. And if your system right now says, you know, the market environment just isn't right, and you're getting feedback from recent trades that you're getting stopped out a lot, getting chopped up, maybe take a step back, lower position sizes, and wait for that environment to turn back around. And usually that looks like the stocks as well as the indexes reclaiming a rising 21 EMA, getting back above the 200 SMA as well as the 50 SMA. So be patient. There will be another strong uptrend. We just have to wait and be looking for those potential true market leaders. So with the Nasdaq covered, let's move on over to the S&P 500. And this looks pretty similar. Let's X this out. We're below a declining 21 and 50 SMA. Just broke back below the 200 SMA here, which is still rising. So that's good. This is a little bit stronger than the NASDAQ. But similarly, we're in a downtrend on those intermediate kind of trends. We are above this level, which is going to be key, I think, next week. Do we kind of find support here, keep that higher low in place? And also, of course, if we do get back down here, this is a key level to watch as well as this if you look over to the left. So definitely some key levels here where we could find support, but I think the volatility is still there, and until that kind of dissipates, it's not really an ideal environment. Moving on to a few more index ETFs to get a sense of the market. Let's take a look at the Russell 2000 Growth Index, the IWO. Once again, below a declining 21 and 50 SMA. 200 SMA is also in a downtrend, and we are just kind of chopping around here. Very volatile downside reversal here. You can see a bearish outside day starting this short-term downtrend, and in reality, this was just kind of a push up into a declining 21 EMA, and now we've been rejected back down from that. We're below 250. And like the other ones, the trend is just down, and we're kind of chopping around, being very, very volatile. And as we get below these declining moving averages, that's kind of when volatility increases as liquidity decreases. And that's what really creates a tough trading environment to go long, especially. And even if you're short, you could easily get a gap up the next day and get stopped out. So be careful. Cash is definitely a position. There will be another uptrend where we can really press on the gas and become really basically invested and even use margin if possible, but be patient. That type of trend looks like what we had back in this area where price is trending nicely above a rising 21, 50, and 200 SMA. Moving on, we've got the IWM, the Russell 2000 in general. You can see we're also below a declining 21 EMA, 50 SMA, 200 SMA, just below 200 once again, and we're below the low of the space. So once again, just in a downtrend and below those KMAs. And lastly, looking at the FFTY, the Innovator IBD 50 ETF, once again, we're below a declining 21, 50, and 200 SMA. I feel like I've said the same thing the past few weeks in the stock market outlook, but it is what's going on here. We had a downside reversal here, also a bearish outside day, starting this short-term downtrend. And right now we are holding up above these levels. So we'll have to see if we can kind of chop around, base out, stick above that, maybe have an undercut and hammer candle above. That would be awesome to get kind of that shakeout. And then maybe we can start the bottoming process, which will last weeks and months. So be patient and keep an eye out for those names that are bucking the overall trend. And I've made an entire video about looking for relative strength and the next market leaders, which will be linked down below and popping up right now. Moving on, let's take a look at a few key growth stocks, which I think are a great gauge for the overall health of the market. Starting with Tesla, you can see we're below a declining 21 and 50 SMA. We broke down below this tightness, and we did finish back above these lows, which is good on this Friday. But right now, the trend is still down in terms of the 21 and 50 SMA. We are holding above the 200 SMA, so that is definitely a key level to watch. You can set alert right at that spot, as well as the 800 levels. So we'll have to see whether this can start building out the bottom of the base, but you can see that based on how this has declined, this will likely take at least a few weeks to move up the right-hand side, form some viable spots, tighten up again, and that's when we really want to get involved as the stock proves itself that it can sustain another move up. Moving on, let's take a look at NVIDIA, which is kind of critical for the semi space here. Once again, negative action on Thursday and Friday. We had basically a rally into the declining 50 SMA area, and now we're back down here. We are holding the 200 SMA, so very similar to Tesla. This level is pretty key, and it will take time to build out the right-hand side of the space. If it does so, and I think this level will be short-term resistance, and you can also mark this level as well. So often we'll get rallies into that, a contraction down, maybe form a higher low, push back into the next one, and that's kind of how the right side of a base forms. Moving on, let's take a look at Apple and Amazon. Apple holding above this low for the time being. Looks like it undercut that on Friday, but closed above it, forming a stage 3 cup with handle. Looking at the volume profile over the past 2 weeks, you can see that volume on these down days has been higher than the recent up days, so that suggests there's some distribution going on, but you do have the relative strength line making new highs. So in comparison to a lot of stocks, this is actually doing quite well, so maybe one to have on your radar. Looking at Amazon, you can see there's a little bit more wide and loose. It's just kind of forming a longer term consolidation pattern. Let's go over to a weekly. It's pretty much been going sideways since all the way back here in July of 2020, although we now have undercut this entire base here. And going back over to a daily chart, recent actions suggest that it's still not quite ready. We're below a 21 EMA. We rebounded back down from a declining 50 SMA, and we are below a declining 200 SMA. So not really a stock I'm looking to get involved in as of this moment, but because it is such an important factor to the overall index, I thought it was worth going over. Also taking a look at Bill. This is reminiscent of a lot of growth stocks. We had a very severe decline, but this is acting better than most. We had a nice push up on volume, forming some higher lows, although we did lose respect for the HVC on this past Thursday, and we're back below the 200 SMA. So maybe not quite ready. We've got some short-term resistance at these prior levels. You always want to look to the left and identify those points ahead of time, and maybe it firms out above the 50 SMA and forms a little bit of a flat base as the market figures itself out, and then we get a nice push through these levels. That would be ideal, but still looks like it needs a little bit of time. Also taking a look at UPSC. I know a lot of people are watching this name. A very severe downtrend, but you did have the highest volume ever, so maybe a potential change in character, although we did see it undercut the low of that gap up day. It was definitely not a positive, but we'll have to see whether it can firm out here, go sideways, and once again, we've got resistance levels here as well as here, so maybe it builds under this level and presents a nice viable spot. I do like the really strong volume here, as well as the annual estimates for 2023. Moving on, we've got Roku, which I'm sure a lot of people have on their minds as well. This has just been in a downtrend since this failed breakout, a break of the 50 SMA, and you really want to pay attention to these type of clues if you're long this stock. And now we're just in a longer term downtrend, and we did have a gap down on earnings, down about 15 or 20%. I'm not quite sure. Looks like down 22%. And we did have a close at the highs here on the highest volume ever, but because it didn't really fill this gap or make a huge attempt to, this is still very, very suspect in my opinion. And we're just in a downtrend. The RS rating is 3, so there's only outperforming 3% of all stocks. That's not what I want to be involved in. I want to be involved in leaders that are outperforming 90, 95, 98% of all other stocks in the market. And with that said, moving on to kind of what is working as of this moment, we've got some shippers acting quite well. SBLK, nice action after earnings. You can see we're trending above a rising 21, 50, and 200 SMA. So this has been a sector that's been pretty strong, and SBLK definitely a leader within the space. Huge earnings the most recent quarter. Also working has been some of the coal miners and mining stocks. Nice trend above the rising 21 and 50 SMA. Also taking a look at Arch. This has been acting well. Energy coal, although it did see some negative action late last week, we are above a rising 21 and 50 SMA, and basically still holding above this prior pivot, which could be a logical spot to find some support if this does continue to pull back. Also, of course, we've got some fertilizer stocks that are acting well into new all-time highs, as well as just the oil and gas names in general. Let's bring up XLE. This is continuing to trend nicely above a rising 21 and 50 SMA. So you've got a lot of names in this group that are acting well. MTDR is one that's potentially set up for next week, although it's a little bit choppy. And we've also got some others. EOG comes to mind here that are trending quite well. And this looks very similar to XLE. So these are basically the areas in the market that you want to be focused if you're looking for longs. But if you're looking to short, look for broken stocks, former leaders that are rallying on below average volume into declining moving averages and then getting rejected back down from those areas. So moving through a few other names, we've got P-Lab, which is holding up pretty well, especially relative to the other semi names above a rising 50 SMA, 21 EMA, and you've got pretty much a pivot right at these levels. Not great action on Friday, but still is holding up pretty well. And we've got a nice gap up here, and this was a stage 1 base. So this is pretty early on. We've got a stage 2 base forming here with a standard pivot of 19.93. Decent earnings estimates and really nice numbers. The most recent quarter, we do have earnings in 4 days, so keep that in mind. That could definitely change things dramatically, either get a gap up or gap down as well. Keep an open mind. Don't buy just because earnings are coming up, and kind of gamble on those results. Moving on, we've got VSCO, Victoria's Secret, which is a recent IPO that's acting pretty well within stage 1 base, forming a little bit of a handle here, pretty orderly in this decline here. And it is holding above the 21 EMA. Nice hammer candle as well. Not huge growth numbers, but we'll have to see what happens in the coming days and weeks. We do have earnings in the next 11 days. Moving on, we've got EXPE. The leisure group is another area of interest for sure. Nice action, making new highs pretty much every day above a rising 21, 50, and 200 SMA. Moving on, we've got Docs, another recent IPO to watch, and it had a nice earnings gap up, although it's still in a downtrend here. We're back above the 50 SMA. We're above a rising 21, and it's holding up really nicely relative to the market, as you can see from the relative strength line. Next up, we've got Bros, which is another recent IPO that I'm watching. Nice hammer candle on Friday. A little bit of a downtrend, downside reversal here, but it's holding that 50 level on a closing basis and is finding support at that 50 SMA. And lastly, we've also got Fang, which is another oil and gas name that I want to highlight. Really nice growth numbers and great estimates as well. So overall, those are a few names that I'm watching. I'm not necessarily going out and buying them the next day, but I'm kind of watching them closely, keeping them on my radar. So if the market does turn around, I've got a list of potential leaders to look for spots in. So overall, that's a run through of some important growth leaders. And now let's move on to sentiment. So starting with my Twitter surveys, we saw a subtle increase from 20.6% to now 26.3% bullish. Not a huge jump, and is still pretty bearish, which is good. Looking at the name exposure index, we're declining, which is good. Back down to 53 from 66. That's a good trend to see. And also taking a look at the Bulls vs Bears poll, we're declining. We're not quite at that level where they're crossing, which is something I'm watching for. And lastly, let's take a look at the put call ratio. Let's open that up. And you can see that we're moving up in the right direction, but we're not seeing extreme fear just yet. I love to see a reading above 1.15. So that's pretty much it. When it comes to sentiment, we're basically trending in the right direction on all these metrics and seeing fear increase, which is good. That indicates that we're getting closer to a potential market turnaround. Moving on to the IBD Big Picture article, the headline is "Stock Market Falls Sharply Again. Will Palantir Technologies Take Out Its IPO Price?" And reading through, discuss the action in the overall indexes down here. They also mentioned how they're changing their outlook from confirmed uptrend to uptrend under pressure, which I'm actually surprised they're still uptrend under pressure just because of the weak action in indexes and also the lack of really nice leadership and overall leadership groups. Although technically we haven't undercut that rally day, so I think that's what they're looking for to call a correction once more. Overall, I discuss a few other names down here, PLTR, how it's basically revisiting its IPO base pivot price here, Snowflake as well as Microsoft and the negative action there. So overall, their view is an uptrend under pressure, 5 distribution days on the NASDAQ and 4 on the S&P 500. Lastly, we've got the Wishing Well GMI Signal, which is still red since January 10th, and the overall GMI score on Thursday was a 0 out of 6. And you can see that Dr. Wish was watching for a retest of this level as well as the lower Bollinger Band. So overall, my current view is a market in correction based on the indexes as well as the lack of really overall leading groups outside of kind of pretty defensive areas. And overall, I'll be watching for stocks kind of trying to decouple from the indexes, showing relative strength above their key moving averages as the market is breaking below them. Forming higher lows up the right-hand sides of bases. That's kind of what I'm looking for. And it's really important to form these RS lists every single day and do your homework now. So that way you're basically ready when the new uptrend emerges. That's how you get ahead when we have extensive corrections like this and can basically identify leaders even before they break out. So definitely go ahead and do that. And overall, I hope you guys enjoyed this video. If you did, please go ahead and leave a like down below and subscribe if you're new to the channel. And I'll see you guys in future videos. Thanks.